Welcome back, boys and girl. I know it's been a while, but I'm back. For those of you who are new here, this is a challenge to grow a Robinhood portfolio that has $500 in it as much as possible using like swing trading options, day trading, all sorts of stuff. So if that's something you want to see a lot more of, if you want to see me crash and burn, or if you want to see me get rich, go ahead and hit subscribe. We talk about all sorts of trading topics in this. But without further ado, let's go ahead and jump on in and take a look at how my portfolio has been doing over the last few months. So it's been basically just trading sideways, and that's a lot my fault because I've not been very active in trading, and every time I have been active in trading, it's usually been like day trading options. And over the past 3 months, I've really netted just probably a small loss over day trading options, not super crazy. So what I'm gonna do from here on out is I'm gonna make a rule for myself. I'm gonna have 3 swing trades open at all times. So that includes just normal swing trading shares and also swing trading options. So that way I have at least a little bit of a goal to trade more so that you guys have more. And I love doing it. It's just been I'm so dang busy, dude. I'm gonna try to keep on average 3 trades open at a given time outside of my long-term investments. Okay, so besides me just covering my own ass there, let's go ahead and take a look at how my stocks have been doing. So everything's been doing great. Facebook's definitely taken the lead with $40 so far. And I've been averaging down a little bit with Facebook. I averaged down a couple shares, not with Waste Management. I added one, even though it hasn't really dipped yet. If it does dip, I'll be happy to add another. And then also with, I added Microsoft as well. And then in NVIDIA, I also averaged down a little bit so that even though it hasn't been performing the best over the past couple of months, I've actually made some money off of it. And again, for those of you who don't know, averaging down means buying at a lower price than you initially bought in, and therefore reducing your average price paid. How can we get myself out of trading sideways like a total loser? Well, let's figure that out. I want to enter an options trade. And every time I want to enter an options trade, I ask myself this question: do I want to be in a low implied volatility environment, or do I want to be in a high implied volatility environment? And in other words, do I want to enter a debit spread kind of deal or a credit spread kind of deal? With debit spreads, if implied volatility is low, it has a tendency to increase. And as that increases, the value of my debit spread increases as well. So if implied volatility is low, I want to enter debit trades like going long puts and calls, or buying debit spreads. If implied volatility is high, I want to be net short on options or sell credit spreads, that kind of deal. So I wanted to put a little bit more of a focus in the coming weeks on debit spreads, just so you guys can see a good sample of good debit spread trades and bad debit spread trades, just to stay a little bit, to give you guys, just to have a little bit more of a curriculum that you guys can follow. So if you guys don't know what debit spreads are, I'm gonna put a link in the corner to a tutorial on debit spreads that I've done, so you can refresh your brain on all that wonderful knowledge and then come back here. So I wanna enter a debit spread trade. That means I want low implied volatility. Some of you might be wondering, how do I search a bunch of different stocks to see which ones have low implied volatility? Well, that's what I use Tastyworks for. Tastyworks is a brokerage that focuses heavily on options trading, and they have all sorts of useful tools when it comes to trading options, including a filter that allows you to filter a bunch of highly liquid option stocks. That can't be right. It allows you to filter a bunch of stocks based on options liquidity and also their IV rank, which is essentially whether or not they have low or high IV implied volatility. So let me show you how to do that. So you're gonna log in, you're gonna see this guy's ugly face. I've talked about him before. He's a piece of shit. And then you're gonna click on trading platform. You're gonna log yourself in, and then down here is what I wanna show you. You're gonna click grid. At the top, you can sort everything by IV rank, and at the left, you can set it to high options volume. That way you can, if you click this, you go from high IV rank to low IV rank, or you click it again and you go from low IV rank to high IV rank, while maintaining all of these having high options liquidity. However, I want to get a little bit more specific than these settings, so I'm going to click this button right here, and the number in the center of all these tiles is the IV rank. So when you see over here that 3, that's the IV rank. Let me make this full screen. So I want to show all. I want to include earnings within a range where there's 30 35 days or more until earnings, because I don't want to hold any trades through earnings. I'm going to do 35 days or more until earnings. And we're going to do IV rank 0 through 49. So we're looking at low IV rank, a low implied volatility environment. We're going to get rid of 1, 2, and 3-star liquidity rating levels, because I like my options to have really high liquidity. It makes those bid-ask spreads nice and tight. That way, when you're buying at the bid and selling at the ask, you're not losing a whole bunch of money doing so. So now we have this nice little organized list of stocks that have highly liquid options, and they're sorted by IV rank. And so what I do at this point is I literally, if I'm not familiar with how these are looking, I will go through each and every one on Thinkorswim, and that's a charting platform by TD Ameritrade, link to that in the description as well. And I will take a look and see which one actually looks like it has potential to go in the upwards direction based on technical analysis. So I'm using IV rank and technical analysis to decide what is the best options trade to go in. And so that's exactly what I did. As I went through all of these, and I decided JD was looking pretty lit. So let's check out JD on Thinkorswim. You can see it has a implied volatility rank of 13. Oh, I should say low implied volatility is generally considered to be 49 or less. That's why I set that filter to be between 0 and 49. The lower, the better. So 13 is looking pretty sweet to me. There's a few reasons why I like this chart. Number one, it's had what's called the golden cross there. We see that yellow moving average cross over the green moving average. That is called the golden cross, where a shorter term moving average, and in this case the 50-day, which is the yellow one, crosses over a longer term moving average, in this case the 200-day, which is the green one. And if you want to add moving averages and that kind of stuff and edit how many days, the length of the moving average, you go to edit studies and you can add everything here. You can search it here. So if I wanted to do a simple moving average, which I believe these are, boom, you can add it right there, and you can go to settings to change the length of them. So this is so right here, that's a 200-day moving average right there. So that's how you do that. So that's a golden cross. That's a bullish indicator. So that's the first bullish thing I saw there. Number two, if we take a step back, this is actually a really beautiful looking cup and handle. And I've seen people like swing all sorts of ugly chart patterns around and be like, look, it's a cup and handle, but it looks like absolute garbage. This is a legit cup and handle, which it can be a continuation pattern, or it can be a reversal pattern as well. What you see is here over the course of basically an entire year, it dips really deep and broadly. And this is a cup part. And then really briefly, it dips down and busts above that previous level of resistance. That is a cup and handle, and that is a bullish technical indicator. So yeet, boom. All right, and there's more. You think that's it, boys? Oh, hell nah. I got more for you. Next bullish indicator we're looking at here on this chart. Watch this one totally flop, by the way. I'm like stacking up all those bullish indicators and it just flops. Falls over dead. We talked about this in the first one, I think, or second episode of this, where I went long on Coca-Cola. It's bullish divergence, where you see one low and then a second low that's even lower. And then down here on the RSI, you see, you can add the RSI up here in studies, just as you do the moving day averages. So you see a low and then a lower low, but on here you see a low and a higher low. That's called bullish divergence and is another bullish indicator. What else do we got? Is that it? I think that was all that I was really thinking of there. So I decided, boom, let's go long on that. So what I did is I went back to Tastyworks here. Oh, we already have it open. Look at that. That's nice. So they have earnings coming up, I think, in August. And as time leads up to earnings, that implied volatility is going to increase. The closer the expiration day is to being like shortly after earnings, the more sensitive the options are going to be to increases in implied volatility due to that binary event. So I chose one that allowed the options to be somewhat liquid and also be not too long after that earnings so that I can capitalize on that increase in implied volatility. So I chose September 20th as my expiration date. Give me a little time. All right, if I go back to this chart here, you can see I put a little bit of a line. I guess that's what it's called, right? It's a line, Adam. Where the expiration date is. So we have a little bit of time, all right, before expiration. And then I also did it a little bit in the money, because being a little bit in the money lowers my break even. It means that the trade has a higher probability of profit. So, and it's a 1 point spread. And if I hit review and send here, I can see that my max profit is going to be $34, max loss 66. And since I have $2,000 in my account, that's definitely less than 5% of my account. So even if this thing totally blew up, I'm not gonna throw a fit. So I'm okay, I'm comfortable with the risk in this trade, but I'm not done yet, ladies and gentlemen. You might think I was, but I'm not. Next thing I do is I go over to options profit calculator and I enter it in there and I take a look and see how everything's looking. Oh, also, yeah, so the break even on here you can see is 29.63 at expiry. So if you go back over here, this line I put is at the expiration date at the break even price. So I just need to stay above this price by this date in order to not lose money, essentially. So I go back here, I take a look, I'm like, all right, this is looking great. It's in the money, which means that I can trade sideways and a little down before expiration. I see that my max profit's 38 bucks, looks good. I just look at this to make sure that, like, does it look pretty? Is there a lot? Am I missing anything? Do I not like the break-even price? All that jazz. And once I look at this and go, okay, I'm comfortable with the trade. If it blows up, I'm not going to freak out. Boom, then I send it. And with trades like these that are not on like SPY, they're going to have a little bit of a bid-ask spread. And so you might need to kind of finagle the price to figure out where you can get a fill. If you don't get filled right away, based on the price that Robinhood suggests, try moving the price up by $1 and then another dollar and then another dollar. If you go up like $5 and it's still not going, your bid ask is probably pretty big and I wouldn't enter that trade anyway. So I went ahead, did that. I entered that trade. Boom, we're in. I've made $1 today. Go me. All right, I took a look around at other stuff and there's nothing that I was really willing to enter on options trades. There's like stuff that looked good, but the liquidity wasn't good enough for me. So I decided I'll do a couple swing trades instead. And in fact, here's what I did. So my first one is JD. Here we are again with that golden cross. We're seeing higher highs, higher lows. That was basically all the technical analysis I did there. I find the price action and information, moving averages. The only time I really find RSI useful is if I'm seeing bullish or bearish divergence. Those are actually pretty awesome. But really, it's more like the moving averages, the patterns on the chart, that kind of deal. That's the most useful. So don't get too wrapped up looking down here and being like, well, it's looking not quite, I could be a little bit more oversold. Just anyway, I'll drop it. So I went ahead and bought 10 shares of that. We needed to set a stop loss for this bad boy. So if I bought 10 shares of that, really I can set a stop loss anywhere, because if I lost all the money I put, if this stock went to zero, I'd be fine with it because I'm risking no more than 5%. But what I would set as a stop loss, since we have a little bit of a channel going here, right? I don't want to hold this trade forever. How much should that be? If we're right here, we set it below that spot, that'll be $1.77. We'd be risking like 17 bucks on the trade. Yeah, I want to give it a little room to breathe. I'm happy to give it a little room to breathe. I'm happy to risk 17 bucks on the trade. So that's what I'm going to do. I'm going to set the stop loss down here a little bit, just below what looks like the only level of horizontal support that's present. And that would give the price to be about we'll do 590. Trade, sell, order types, stop loss, 590. Good till canceled. And all 10 of them. Okay. So what I'm going to do is I'm going to set an alert, right click, create alert, at or above, I'm going to do at or below 590. That way I can get a notification on my desktop and my phone. You can download the app if you want to. And I'll know if I get stopped out so I can find something else to put those funds back into. However, if this starts moving up, heading up, keeps following this pattern, stair-stepping its way up, I want to add more shares into this trade in the future if it keeps showing that's going in the upwards direction. And so to do that, I'm going to set an alert that's probably a little bit higher up here. I'll just say above the recent high is when I'd be comfortable adding more to that. And I'd adjust my stop loss accordingly if that were to happen. So right click, create alert, at or above 938. Boom, now we have a spot where we got stopped out. Now we have a spot where we can add funds and we'll just wait until something happens. We got our trade, we're comfortable with our risk. Awesome. Okay, what next shall we dive into? Well, I found one more. By the way, if you guys are like, how are you finding the stocks? I have this massive list on my community tab on YouTube where I put basically all the stocks that I ever look at. It's like the mother list of all time. I really need to organize it, but a lot of times I'll literally just like tap through the whole thing and just like eyeball a good handful of them and I'll narrow it down to what I like best and then I'll enter the trade. So if you want to see a bunch of different stocks to just browse through, it's in my community tab over there. So my other one, let's see what else we found here. Oh yeah, low. So this one's pretty obvious as far as like price action goes. It's pretty volatile as well. So it's gonna be kind of a wild ride, I imagine. But you can see that the pattern is in an upwards channel, pretty consistently hitting a certain level of support, bouncing off, hitting a certain level of resisting, bouncing off. And really the overall trend, if you look at the 10-year, is in the upwards direction. So I view that as pretty favorable. And just based on that channel, I'm totally comfortable hopping in. So that's what I did. I bought a couple shares of that. Let's go ahead and set a stop loss for this bad boy, which would be below this level of support. You know, risking about 24 bucks on the trade, roughly around there. I'm gonna dip a little bit further because sometimes it can dip down a little bit worse. So we'll go right there. Be about 26 bucks on the trade, which is fine. That's with the $2,000 account. That's fine. 20 bucks is no big deal, as I like to keep it 5% or less, usually less. I'm honestly a bit of a baby. I like keeping things, like if things start making me uncomfortable, I'm out. I've gotten burnt before and I do not like getting burnt. So I'm pretty conservative. We're gonna go ahead and set it, we'll set it right there where my loss is about a $13. So let's go ahead and create an alert at or below, you know, let's bump it up to 90. All right, we'll hit create. We'll go back over here to our Robinhood account, trade, sell, order types, stop loss. We said 90, right? Yep. So we're gonna do 90. Good till canceled. 2 of them. Great. Likely I'm not gonna be able to really buy into this one this much because it just takes up a lot of funds. But I'll go ahead and create an alert just in the case I do, if it takes a while and then starts moving in the upwards direction, I have more funds to play with in my account, then I'll average up into it. What the heck are all of these? Did I set these? Okay, so it looks like I set it last night. So this is where I buy more at, just somewhere in upwards. It doesn't have to be super specific. It's very subjective, just somewhere that's above where we are now. And then I also set an alert that's up at this possible level of resistance right here as a potential spot to just exit the trade. So there we go. Now we got a spot where we get stopped out, a spot to add money, and a spot to exit the trade. In fact, we should, with this one, I have a very specific spot to exit the trade. With the other one, was a QD. I didn't set a spot to exit the trade. What I'm gonna do instead is I'm gonna do a trailing stop loss where as time goes on, if it starts moving in the upwards direction, I'll continue to move my stop loss up. So there's not like a specific price I'm gonna pull my money out. Eventually, I'll just get stopped out of the trade, hopefully for a profit. So there you go. Is that it? Did I do it? Oh, I don't think I said. So I'm up like 107 bucks overall. I've been adding funds kind of a little bit irregularly, which I'm kind of annoyed at myself for doing. It should be $250 every month. That way you guys can kind of follow along, do the exact same thing. So I'll adjust my deposits accordingly over the next 2 months. I've added a little extra, more than I should have. So over the next 2 months, I'll deposit appropriately to bring it back down to where it should be. And we'll discuss that later in the following months when I need to. If you guys have any questions, you can ask them in the Discord. You can leave them in the comments. I love you guys. Have an amazing week and have a great time on July 4th. Don't get too hammered. That's a lie. Get absolutely wasted. Love you guys. Peace.